Five, this company obtained a 60% holding in the 100,000 uh, $1 value of this company on 1st January 2018. Okay, this company paid 250,000 of cash. They paid immediately with an additional 400,000 payable on 1st January 19. Okay, so cash they paid on this date only. Okay, and the remaining payable, it will be payable on 1st January 2019. It will be payable 400,000. So this is $1, 100,000. Okay, I will move these figures to some other column to make it presentable. So what happened on 1st January 18? They acquired 60% holding in the 100,000 $1 company. So what is happening here? They have taken 60%. So this is the number of shares multiplied by the unit price. Maybe, I mean, we need to multiply it by the fair value. We will do it as we go further into this question. But for now, I'm uh, just for the understanding, we have acquired the 60,000. Okay, and we are paying 250,000 on 1st January 18, and the remaining 400,000 will be payable at the beginning of next year. And one share in cloud company for each two shares acquired. Okay, so we will divide. So what else we are going to pay? We are going to pay this divided by 2, so half of it, one share in cloud company for each two shares acquired. So 30,000 shares we are going to pay, I think, on this date only. Hmm. Equity shares we are going to give this 30,000. Cloud company has a cost of capital of 8%. So cost of capital means had we invested this money somewhere else, we would have earned some earning. So that is 8%. And the market value of its shares on first was 2.30. So here instead of 1, we will go with uh, 2.3, which is the market rate. Okay. So it is the 130,000 is the worth of this. So they are asking what, okay, wait a second. This market value of its shares, hmm, missed company, but it is talking about cloud companies, everything. So it looks like this 2.30 is the market value of this company's share that is acquiring. Okay. So we are, for this 30,000 shares. So what is happening? This is the number of shares. So we'll divide it by 2, because for every two shares we are giving one share. So actually we are giving them 50,000, not this thing. So but this multiplied by 60%, 30,000. Okay, 60,000 we are doing in this 30,000 shares we are giving at the rate of 2.30. Okay, so this is what we are giving. So it is asking what is the total consideration, how much we are paying. So we are paying this cash. Okay, remaining cash, this cash we are paying on 1st January 19, and then we are giving 69,000 worth of shares. 719 should be our answer. Okay, so option 2 should be answer. It is asking what is the total consideration we are paying. Okay, so we are giving them this 250, no doubt about it. We are giving 400,000 also, but here is a catch on this 400,000. Actually, this we will pay on 1st January 19. Okay, we will pay this 400,000 on 1st January 19, and then they are giving us this cost of capital also, which is 1 point, which is 8%. So what we need to do, we will hmm, hmm. So because we will be paying it in the next year, we need to do it at the present value. We will not add the entire 400,000. Hmm. And shares we will give of 69,000, that is sure. because this 2.30, we need to be careful about these dates. This on this day on 790 is not the right answer actually, because of this cost of capital. We need to be careful about this. So let's redo this. So cash we will be paying 400,000 of we will be giving, but this we will pay on 1st January 19, and it is asking about the total consideration as on the date of this acquisition. So on this date, uh, we need to revalue this 400,000. Our cost of capital is 8%. So how do we calculate it? We take this payable and divide it by, it is 8%, so we'll divide it by 1.08. Okay. So instead of this 4,000, what we will take? We will take this 370. This we will take 70 because 8% is the what? 8% is the cost of capital. Okay. So here we will divide it by 370. 370 will be our this thing. I'm just trying to cross check this. So if I add this, will it become 400,000? Yes. So because 8% is the cost of capital, during this year it will, this 370 will become 400,000. So we will take this one. This we will take as it is, and this cash we will take as it is. Okay. So it will not be 719. It will be 689,370. Okay. So the first one should be the answer.